Spring represents a time of high activity and opportunity in Ontario's real estate market, so I thought it would be timely to talk about real estate as an investment and the advantages and disadvantages of real estate compared to stocks and mutual funds. So starting with real estate, some of the advantages are, firstly, it's easy to understand, the idea of purchasing a property for a certain amount and then selling it later for a higher amount. Real estate is generally considered a hedge for inflation because property values and rent amounts typically increase with inflation. So it helps your money to keep pace with inflation. And investing, if you're borrowing to invest in real estate, it's usually safer than borrowing to invest in stocks and mutual funds. Some of the disadvantages of real estate as an investment are, firstly, it's a lot more work typically, more sweat equity, having to do with property management, maintenance, repairs, maybe collecting rent. Another disadvantage are the transaction costs of purchasing and selling real estate, a lot higher than investing in markets. It's more difficult to diversify if all of your money or most of your money is invested in one asset. It's hard to get diversification. And real estate is expensive and highly illiquid. So if you want to take your money out of your investment, if you want to sell the asset, it's not always easy and it's not always fast. Some of the advantages of investing in stocks and mutual funds are, firstly, very liquid. So if you wanted to access some cash, it's very easy to buy and sell stocks and mutual funds. Transaction fees are much lower than when you invest in real estate. It's easier to diversify because you can buy small amounts or smaller amounts of various different assets. You can also invest in a tax-advantaged account, such as a TFSA or an RRSP, for example, and you can't do that with real estate. Some of the disadvantages, though, of investing in stocks and mutual funds are the volatility. The price of markets sometimes changes very quickly, much more quickly than real estate often. And that leads to the second disadvantage, which is that oftentimes an investor will make an emotional decision by selling low. They'll want to sell the asset rather than use a buy and hold strategy, which is usually produces greater returns. If you have an investment portfolio and you would like to diversify into real estate, you can do that with buying a real estate investment trust. So that's a company that buys office buildings, apartment buildings, malls, etc. And they are traded like stocks. You can buy units of the company. Oftentimes, units of REITs are included in mutual fund holdings. It's a way to diversify and include real estate in your investment portfolio without actually purchasing a property. Feel free to reach out to us by phone or by email. Our website is kccuwealth.ca. We look forward to hearing from you.